Hello friends, on this episode we are going to talk about a very fundamental thing about audit, which is the risk and controls. Now to those who are experienced in this field, it might be an easy thing to do or maybe not that difficult, but what I would suggest is do not underestimate the need of identifying the right risk, because that is the very core and fundamental thing to what we do, especially in an organization which is risk focused and mature environment or mature markets. On the other hand, the risks are always changing, the business environment is changing, the market is changing, so it is very important to keep ahead of it. To those who are new to this profession, who have really spent just a few years in the profession, for them it might be a bit of a challenge to really understand, because it requires an attitude also to understand what the risk and what the control you should be looking after. So let's start then. My name is Mohammed Khan. I have worked in this industry of audit for some time, and my specialism is technology audit. But I promise you that I'm going to keep this video free of any technology or IT jargons. Even the examples I'm not going to take from technology, because I want to keep it open for all. So let's start with the definition. What is really the definition of a risk and a control? Now, to me, and probably some other people will also agree with this definition, is a risk is something that stops you from achieving your goal or business goal, if you put it in the context of business. And the control is anything that stops that risk from materializing. Now, there is one thing which we haven't spoken so far, or which usually people don't speak when they are talking about risk and control. You may hear different terminologies called PRC. Some organizations use PRC, which is process risk and control. Some organizations say RCM, which is risk and control matrix. But I think the real focus should start from business risk or business goals, because that is where it's all start, and that is what all of us really care about, right? So for that, what I would suggest is start from understanding what are the goals or the objectives of the business, or the business you are trying to audit or you look after. And then from there, you try to understand what are the processes that your business follows in order to meet those objectives or those goals. Once you have done that, in that process, you try to see what are the risks that may stop the organization from achieving those goals or maybe completing those processes. Once you have done that, then you try to look at it from a different angle and say, okay, yes, those are the risks. What are the controls, or what does the organization do in that process to stop that risk from materializing? Now, let's take an example first, and then we will move on to the other aspects of it. Now, a typical example, I'll take a very simple and basic example of an objective or a process, and then a risk and control. Let's take an example of a manually initiated fund transfer. Now, what really a manually initiated fund transfer is, when a customer of a bank or a client of a bank send us instructions that he or she wants to move X amount from his or her account to a beneficiary account. So what we are required to do is basically debit the customer account and credit the beneficiary's account. The objective is basically to transfer the fund. So that is our business objective. Now, what can impact that objective is basically the risk that we are looking for. So when the team receives the funds transfer or funds transfer instructions, they follow a certain process in order to do that. For example, they receive the instruction, they verify the signature of the customer, or maybe they give a call to the customer to verify that it has been initiated by that particular customer only. And then once that process is done, they may take it to their supervisor or their managers and say, yeah, this is the transfer, depending on what the amount of the transaction is. So let's not go into those details. The person may take it to the manager to verify whether everything is in order, and then that staff goes to the system and basically initiate the transfer, which means debiting the customer account and then crediting the beneficiary account. Now the risk is that you may not be able to do this transaction in the right manner, which means you may have received the instructions from a fraudulent party, faking out that instruction. So that is one risk. The control to that is you may verify the customer signatures which you already hold on your in your system, or you may give a call to the customer to verify that. So let's consider verifying the signature is one control. So, and then once that is verified, then you can go ahead and debit and credit the accounts. Now in this whole process, what we have seen is the objective to debit account and credit account, beneficiary account. We have seen the process, which means receiving the instructions, verifying the signature, and then verifying it by your supervisor or your manager, and then processing the transfer. So that is the process. In that process, the risk is you may have received it from the fraudulent customer or fraudulent party, and the control to prevent that is verifying the signature that you have received on the instruction with the one that you hold on your system. So that is just a very simple and basic example of how you try to determine what the risk and control are to meet your business objective. Now in this process, in some certain circumstances, you may find that your that step for verifying the signature doesn't exist, which means there is a flaw in the design. In some cases, you may find that the step is there, but it is not being followed properly. Now, how to differentiate with amongst those two different scenarios, we will cover that in a different video. But this one was really try to understand what are the fundamentals of identifying the risks and control. And with that, we come to the end of this episode. If this video has helped you in putting the business objectives, risk and control with a different perspective or simplify it for you, then please do not forget to share this video with your colleagues, with your friends, with your fellow professionals, and do write in the comments what you liked about this video. And the other thing which I would encourage you to do is post some suggestions. What are the type of topics you would like to hear in the audit space, or especially technology space, technology audit space. I would love to have those thoughts from you, because that is what keeps this forum going. So please share this video, please leave your comments, and subscribe to this channel. Thank you so much. I'll speak to you later again soon. Bye bye. Have a good time.